will have a temporary impact. And what you'll see a lot of times, like the Saudi announcement, oil went down, I think, for a day, and it's back up higher above that now.
Yeah.
And I think what would happen if Obama made the announcement like that, I think it would probably have a temporary impact on the market, because I really think supply and demand is driving it right now until...
Well, let's slow down. Obama's not president yet. It would have to be done by...
No, I know
right.
that.
Congress and President Bush right now would have to do that if they could do it tomorrow. But see, because I talked to another oil trader who didn't want to come on the show that said, that would probably bring down the price by 15%, just knowing that we're going to start drilling in all those areas, just because they know that we will have this increased supply. You disagree with that, huh?
I disagree with that. It's going to take too long to come online. And the way that the demand is increasing, it's going to be too little. It's too little to really have that big of an effect, a 15% effect.
How about when it all does come online? Because we're talking about a couple million barrels a day from the outer coastal shelf. We're talking a couple million more barrels a day from Anwar. Right there, we use 21 million barrels a day, so we're talking about 5 to 6% of our domestic need could be met. If all those things are running and chugging it out when they're all online, wouldn't that have an impact?
Well, it would have an impact, but that's also, you have to project out when that will come online, and by then our domestic need will have increased by, whatever our GDP is.
Well, but obviously then if it's increasing and we haven't added those things, it'd be even higher.
Yeah, that's what I'm saying, but I think...
But you just don't think it's going to keep up with the demand. All right, I'm almost out of time. Let me ask you just one last thing. How much is the value of the dollar impacting the oil price because of, oil's priced in dollars and the value's gone way down, and you talk about hedging with commodities. I saw that it would be valued at about $75 to $80 a barrel of oil if the value of dollar was what it was a year ago.
Right. Well, the dollar's come down about 11% over the year, and I think the dollar was an important part of the story for a while, but I think essentially over the last month or so, crude oil and the other commodities, but mostly crude oil, have decoupled from the dollar story. And though I think the dollar is going to remain weak, I think that the story is shifting to supply and demand.
Very interesting.
And I think if we do get a stronger dollar, they've been trying to talk it up, they might boost interest rates. I think it's just going to have a temporary effect at most. And I think that crude oil has decoupled from the dollar story. And yes, a weak dollar does affect it, but it's not just a dollar story. It's
Patrick Kerr, oil trader with American Futures Trading. Hey, thanks for being with me. It's interesting. Different take than many other people I've talked to on this, and that's why I like to have people with different ideas on the show. Love to know your thoughts on that, and if you agree or disagree. Patrick Kerr, oil trader, American Futures Trading.